Hello.
Hi, Vinod.
Hello.
All right, Vinod. Thanks for joining us today at SaaSBOOMi's first US edition. Vinod Khosla, as all of you, I'm sure, know, is an entrepreneur, investor, and technology fan. He is a founder of Khosla Ventures, which is focused on impactful technology investments. So thank you very much, Vinod, here. Of course, we have seen the SaaS wave over next 5 years accelerating very much. But, today the topic is that, is it going to stay forever? You have capital is kind of drying up. The valuations are down, some from 40x to sometimes 7x. The market median multiple is down from 14x to 5x for the SaaS companies. So what is your view on what is happening in the market, and how would you advise the entrepreneurs to build a global company in such an environment?
I more than anything else tell people to take the long view. Companies aren't built because the market is up or down. Of course, your resources can change based on whether the market is up or down. But fundamentally, a company starting today won't need to worry about the markets for 5 to 10 years. So many of you have gone through the journey. You have to be successful in 5 to 10 years. Now, if funding is less available, you have to do it more economically, which, by the way, gives Indian companies an advantage because costs can be lowered. There can be ways to start the product in India, test the markets in India, do it in a smaller way, but with the idea that eventually you will be global. And so I do think the current markets make it a little harder because funding is harder, but it shouldn't make it any more difficult than it has been. Startups, successful ones and big ones that go global are driven by great ideas. And those are not in short supply, or those don't go down with the markets go down. So I'd take an optimistic view.
I understand. No, that's good to hear. So, what really happens is, if you look at last 5 years, this generation of entrepreneurs have never seen a downturn. Cost of capital has been coming down. Capital has been available more than ever before. So entrepreneurs really get confused, what advice to take. Even now also, when we speak to entrepreneurs, some of them say, oh, venture capital have a lot of dry powder left in India and in the Valley, so the money will come. Some say, no, the doomsday is coming, recession is going to be here. Western Europe is going to hit very hard. US will hit hard, so you should think about starting a company again. So how do you think about, if you are a young founder in your early 30s or late 20s and starting a B2B software company, how do you decode this whole advice business? Who do you really go to? So how do you think about, how would you really, guide in a new founder in such an environment? And many of them have not seen a downturn in the last 10 years. Market has been just going up and up.
Yeah. Well, one thing founders do very well, the good founders do really well, is adjust to things in the marketplace. Previously we talked about adjustment in terms of finding the MVP, pivoting, things like that. Being very, very tactical and pragmatic. I view markets as affecting financing, but the honest fact is any entrepreneur who's in the market, their competitors will have less financing too. So in fact, I would venture to guess capital will become much more efficiently used by everybody, because if one competitor raises $50 million, you're going to have to compete. But if nobody has capital, then the best products are more likely to win, and they won't be hidden under the blanket of too much marketing spend or too much other spend. So I actually think it's a very good time. Some things are harder, other things are much easier. The competitive picture will be much easier. Hiring will be much easier. And customers, when you get to them, will be looking for more economical solutions. So I do think this makes some things worse, some things better, but overall, I think better companies will be started in the downturn than at the top of the market when people are exuberant, because the not so great companies also get funded. I think there'll be fewer companies funded, but much better companies funded, and much better entrepreneurs who are more scrappy, more efficient, can be more clever about how to get things done, leverage their resources, etc.
Yeah,
So it is
and I know
generally
Vinod,
good news from founders.
and absolutely it is. And Vinod, I've seen you talk about 0 million and billion, 0 billion, the way you think about finding the company. It'll be good to, elaborate your thinking for the, Indian founding community here. Some of them have come from India. So is that going to change in the new environment, or the fundamental remains the same?
I think the fundamentals of a startup remain the same because it is a 5 to 10 year journey. And entrepreneurs who are gearing up for that will not be hugely affected. Short term, start something in 2 years, sell it quickly, that may change pretty dramatically. But in India especially, companies will have to make a choice. So you can start a business in India with much fewer dollars, but you have to decide whether eventually you want to be a large global company or not. And the gene pool of a company started today will determine whether it gets to be a large global company. So a startup has zero in revenue, but I like to say there's a difference between a $0 million revenue startup and a $0 billion startup. It may not be evident the next 2 years, but the teams they assemble now, the quality of their thinking, how they think about strategically about products and which markets they will eventually go into happens up front. And mostly it depends on the quality of the team and how people think about building the team that will build their company. I like to say a company becomes the team it hires, not the business plan it makes. Because along the way, if you have a great team and hire a great team, it iterates the plan to be a much bigger plan. So keeping that in mind, I think this idea of a $0 billion company is one that's thinking like a $1 billion company, behaving like a zero revenue company. It's almost a schizophrenic kind of outlook. But entrepreneurs are used to holding contradictions in their head.
Yeah, absolutely right, Vinod. That's how it is. I think speaking about building the team, as we talk about, there are many companies starting in India now and building for the globe. And you invested in HealthifyMe, which is in healthcare business. You are very excited about them coming to the US and building a global business here. So what are your few tips of building the really, really global or great teams, which can take you to $1 billion realized dream, right? There's a lot of gap between that, and hiring and judging a team member is probably one of the most difficult things. And there are many things around it. How do you carve the ESOP pool? Which pool you go after, and how do you engage with? So it would be good to get your perspective and some learnings from your experience on that.
Well, first, on our website at Khosla Ventures, and anybody who wants to email me can email me at vk@khoslaventures.com. There's an article on engineering the gene pool of a company. I'll try and see if somebody can put it in the chat box or make it available to you. So that is one thing that's very important. Now, there's a technical approach to engineering the gene pool of a startup. And that is what this article mostly covers, which is about taking the risks in a business and hiring the people who minimize those specific risks you can tell. But there's a second part to this, because many of the risks in a business are not known early. And when you're starting, you don't know everything about the business you're starting. In that case, what a team has to do is discover those risks early, ask a lot of questions, and really evolve the strategy very rapidly. I call it the rate of learning becomes the most important thing a team does in its early years. There, I have another article on our website on hiring. And let me present it with a simple question. When you hire a VP of engineering, will it make your VP of marketing better? If somebody on the senior team, yes, they have to do engineering management well, but if they aren't asking the questions that expands the quality of thinking of the marketing leader, or challenges them with good questions, challenge in a collaborative way, you're not going to get a company that evolves its thinking rapidly. So this generalization towards pushing each other to be better, asking more questions, challenging each assumption the company is making about how things work, those are all the things a really good team does. And I have some articles on the second phase of hiring, which is this kind of build a team that pushes each other to greatness. And that's a very non-functional hiring. So when you hire a VP of engineering for engineering or a VP of marketing for marketing, that's functional hiring. When you hire them to be a team to make the rest of the team better, that's much more general hiring. And I think it becomes very, very important at the senior levels. So what you don't know gets discovered early. The assumptions you're making get tested, not just assumed and discovered too late to be right or wrong. So there's a real art to hiring. In fact, one of the things I like to do most with teams is think about these issues. Right. How do you make a team much, much better? I spend probably more time recruiting than any other single thing I do in my life. And that's recruiting for our companies, individual, even sometimes engineer level people, because these things are so important.
Absolutely. And what, traditionally, if you look at least the capital structure of the Indian companies, we keep about 10 to 15% ESOP pool for apart from the founding team for the employees. So what role is there a better ESOP structure, or is there a better capital structure which can enable you to build better team? What role does that play in the entire scheme of things?
Very important question. First, each company is a little bit different, but I find 10 to 15% not adequate generally. Think about it the following way. When you're hiring the first 15, 20 people in a company, you want to hire superstars. So a superstar's option is to join you or go start their own company. And you want the people who can start their own companies, which means you have to make very, very attractive offers, right? So it becomes very important. It's not just a functional job to be done, code this back end for me. It's much more, because they help evolve the company and seed the rest of the company as you grow beyond 20 people. I will tell you, in the first 21, the best things we did at Sun was hire the first 20 people to be complete superstars, whether we functionally needed them or not. You know, a guy like Eric Schmidt was one of our first 20 hires. He went on to be CEO of multiple companies, including Google. Women like Carol Bartz went on to be CEO of AutoCAD and Yahoo, all out of the first 20 people, each one. There's probably more companies started by the first 20 people, more billion-dollar companies by the first 20 people at Sun than most companies. People talk about the PayPal mafia. Sun had a mafia that had a huge impact in the Valley. It just was in the 80s and 90s. And so that talent pool really makes a huge difference in how you build it. And so ESOPs become very important to be as generous. When I work with companies, I said you shouldn't ever have an ESOP budget. Anybody great, get them at any cost within some reasonable bounds, because you want the people who take a lot of equity to get.
Right. So what in general, on average, what is the typical good capital structure? How much should be the founder's equity versus, overall equity of the employee pool? Is there any, at Series A, Series B, is there any, benchmark or a compass which we can all follow?
No, it's different. But when my son started a company, I said, keep 15% and keep 60% on the ESOP pool. Partly to, yes, that was the actual number. I gave him
Wow.
and two of, look, he hired two co-founders at equal to him later. That really helped. And then there was a whole bunch of other people. He hired a bunch of people who could have made $1 million a year at Facebook, had to take startup salaries. So you had to give them 5-6% of the company, especially if they were AI people in the Silicon Valley. So that is pretty important. But each situation is different. It just depends on what it takes to hire the team you really need.
No, it's really good to understand the first principles of hiring and how do you structure both the compensation and the ESOP pool and of course the functional areas. It's great learning for all of us here. Switching gears now, I think you have seen almost multiple decades of innovation from enterprise software to energy, and I've seen you talking about 3D printing and how you can reduce the construction cost or construction material. So and then AI, of course. So how do you think about role of AI and the role of innovation, or what kind of innovation do you think is going to we should expect in the next decade to come?
So there's more innovation going on now than I've ever seen in a long time. Now, the boldness of the VCs has declined some in the current market, but there's still VCs. We are still aggressively funding really bold ideas. So if somebody has a really bold idea, we are funding it. Now, relatively undifferentiated ideas are much harder to get funded today. So I would say, especially, let me speak to enterprise SaaS. Every vertical in enterprise is a SaaS company waiting to happen. And so there is a lot of opportunity. But that's not sufficient. First, it's always nice to have a great idea and start early. Maybe build it up in a market like India where you're testing your MVP, getting your product ready. But like I said, you have to be thinking global from day one if you're going to be global. Otherwise, it's too hard. Otherwise, the team you attract isn't qualified to go global. How you think about your initial product determines the team you get, which determines your global footprint later. But you also have to say, what do I bring that others aren't bringing? So today, this combination of SaaS, but plus AI is a massive opportunity. If one can really harness that talent and come up with strategies that use AI, and Healthify.me, who you mentioned, has an AI nutritionist. It's a big AI play, not just a nutrition play. But that's true in building a new Zendesk or a new Freshworks, or you name your favorite. So in almost all areas, you have to think about what's the radical innovation that will give us a significant advantage. Because when you're a startup, your cost of selling is very high. Selling is very difficult. The hard part of entrepreneurship seldom gets talked about. It just sounds very romantic, but it is very hard, as most of your entrepreneurs will know. So what you have to have is something else that's such a big advantage. It makes up for your disadvantage in sales coverage or sales force or brand recognition or other things. But I do think in SaaS, AI offers a huge opportunity. In supply chain, half the things that are done in supply chain could be done by AI. Let me give you one example that since I'm assuming a lot of your audience is engineers. You know, if you look at the Microsoft Copilot product, it's exploding. AI-based coding is going to be a big, big deal. I've spent an incredible amount of time looking at the opportunities in that area. We have a company out of Israel called Tab9, which claims their AI is writing something like 1.5% of all the code on the planet now. That's pretty stunning for Tab9 is the company's name, just measured by lines of code. My point is, there's very little difference between AI coding and what the less sophisticated people are calling no-code developments. But AI coding with humans in the loop, which is easier to do in India, could be a huge advantage in a lot of SaaS businesses. And so I do think a massive opportunity exists, but it takes a very different level of talent than just software development. You know, software development is much easier to start the staff than real AI talent. But you know, I would urge people to look at a company called Poly AI. We funded in the UK. Customer support voice calls. You can't even tell it's not a human. Strictly driven by AI and great UX design. That combination. So some large advantage is what you need in today's world to differentiate yourself and make go-to-market easier.
No, perfect. Now, this is a great view into how we should think about enterprise software and combination of AI. And we fully believe we are with you, Vinod. You know, that's why we are here. We believe India has a great opportunity in front of itself. And one final question. So given the environment,
before your last question, let me address your last comment. I'd love to see more companies out of India that are global companies. And I think it is not only possible, it's very likely. And so I hope many in your audience are really focusing on this idea of building global companies, staffing up like they're building global companies, using the Indian environment to test their products and do the iterations early, which are expensive iterations, getting your product market fit right, but really have the mindset to build global companies. And I'd love to see that. I'd love to encourage it. And I hope it happens.
There's the early shoots of seeing that. We are all building, you know, products in India for the globe, of course, not at the scale perhaps as you're talking about, but I'm soon going to reach it. That's why we are here to learn from Valley how to think, you know, really, really global from day one. And on the final note, you said, you know, journey of the founder is always very, very hard. You know, you are dealing with a lot of unknowns, uncertainties, both in business and in personal life, you know. So what would be your advice to the founders who's starting today or who are in their journey somewhere as they're building the companies?
You know, you have to broaden your thinking. That's the one piece I've seen missing in India. You can absolutely do India first SaaS, but your thinking has to be very, very broad. So that's very important. And look for these big advantages. Think about a $0 billion company, not a 0 million company. And think about hiring in the context of building a large company, not just the initial startup you need. So all those are very important. I think it's also very important to get the right investors who want to be a good partner. If you want to be super conservative, let me leave you with one thought. Most investors, in my view, reduce the focus on increasing the probability of success, but in that process, dramatically reduce the consequences of success. That's okay for some entrepreneurs, and some entrepreneurs will prefer that. I myself like entrepreneurs who don't mind taking more risk, but want to make the consequences of success super consequential, build really large companies. And that means thinking about ESOPs differently, your investing partners differently. Your investment partner will make a huge difference. Money isn't money. Most of what you're getting is a mentor and a guide. And that's what helps you think one or take one path with broader thinking or another path with sort of fairly conservative thinking. I'll give you a joke I make about European investors in general. And I think it's true of many, many Indian investors too. They take every great idea and turn it into a decent idea safely. Anyway, enough said.
No, thank you very much. We know that a lot of takeaways from us. And, I think the key takeaway for me is hiring and how do you really, engineer the gene pool for your company and, thinking really, really good from day one. We are thinking global today. Perhaps there's still a gap and we're going to continue to look up to you and come back to you for advice as we continue to build presence here.
Yeah. So supply chain is a really great place to start in India because you can perfect products because one end of the supply chain is in emerging markets.
Right.
So if you take your own example, that's absolutely true. But I hope in your audience is some people who really want to build a global brand and a global company. Start small. By the way, it doesn't mean raising more money. I've generally found people who raise small amounts of money and de-risk the key variables and build the right kinds of teams and make sure that 2 years later they're working together. Smaller raises result in better companies if you're methodical about how you use that to eliminate risk before you start spending. If you start spending the way some investors were encouraging companies to spend, you actually don't de-risk the company, you hide the risks with overspending. And you never quite get to an efficient company. So very, very important to get the right advice and partners.
No, absolutely. We all love, we all believe in efficient growth from India and we are all frugal coming from the communities all we come from. I think that's in our DNA in many ways. So we'll continue to build on it. Thank you very much, Vinod, and we'll come back to you. Thank you very much. Thanks.
Thank you, everybody, and good luck.